If you're a successful agent and your tax bill is over $50,000 annually, then this video is going to show you how to make that number drop to almost zero legally. You'll learn exactly how real estate professional status works, how agents like you are using it to erase their tax bill every single year, and what to do next, even if your CPA is somewhere on a beach not responding to your emails right now. Let's dive in. All right, so the tax code isn't all bad news. It's actually built to reward two types of people: business owners and real estate investors. Now, the problem is most real estate agents that I know file their taxes like W 2 employees, right? They wait until the end of the year and they just bring their docs and everything that they think they might need to their tax guy. The tax guy asks them a couple questions. Great, yada yada, boom. Here's your tax savings, right? And what happens overwhelmingly is that people miss out on their tax benefits that come along with being a real estate professional. And what happens so often is people are overpaying Uncle Sam, but Uncle Sam won't tell you anything, right? Uncle Sam is happy to take your money, and it's your job. And Uncle Sam puts the requirements on you to understand the tax code. Unfortunately, the tax code is way too big and boring to actually want to read. And so, one, if an agent like yourself doesn't have a proactive strategy, you overpay on your tax bill. Look, you're a business owner, you work hard, you take risk, and every single year you get crushed when it comes to tax season. Now, your CPA or your tax guy might say, "Hey, look at this refund I got you," but that doesn't mean that you actually got money back, that you didn't pay Uncle Sam anything. It just means that you overpaid them throughout the year. And so you got to be careful at what that actually looks like, and you need to know exactly how much you're actually paying Uncle Sam every single year. I'm going to tell you this one thing that's going to change your life. There is a golden ticket hidden within the tax code, and it goes by the name of a real estate professional status. Let's go ahead and dive in. I'm going to go ahead and share my screen here, and we're going to look at what is real estate professional status and how does the IRS actually define that term, right? I've asked this question to a lot of agents when I give presentations, and I always like to get their feedback. What is a real estate professional? And you get all sorts of answers. Well, we aren't the ones that create the rules, right? We have to look at the tax code and how it's actually defined, and then look at how that the IRS is determining what that is. Okay, so when we actually go and define what real estate professional status is, or otherwise known as reps, there's three requirements that we need to hit. Okay, number one is we have to spend more than 750 hours, right, in a real property trader business. Okay, now there's different real property trader businesses, but for the sake of this video, you're a real estate agent watching this, you qualify as a real property trader business, your agent business, right? You're brokering real estate. That's actually the correct term, and how you actually fall under a real property trader business is you broker real property. Okay. And you, as an agent, doesn't matter if you have a broker's license or just an agent license. Okay. You are acting on behalf of the broker every single day. And there's actually a couple tax court cases that go over this, where the IRS actually challenges an agent who's qualifying as real estate professional status. And they're saying, "Hey, you don't have a broker's license. You're not brokering real property." And what was actually decided at the end of that court case was that the agent does count as brokering real property, because oftentimes us as agents are always acting on behalf of our brokers. We're always brokering real estate. We're doing paperwork. We're representing the broker many times to our clients. And so if you spend more than 750 hours in your real property trader business, so in your agent business here, throughout the year, you've hit qualification number one. Okay. We must also hit qualification number two, which is I must spend more than 50% of my personal service hours in this real property trader business. So for what this basically means is, for all you part-time agents who have a side gig on the business, maybe you're driving Uber, right? If things are slow, I don't know what you're doing, but if you're not spending more than half of your personal service hours, so more than half of the time that you spend working in a day-to-day job, right, or in your business, If you're not spending more than 50% of your time in a real property trader business, then you're not going to qualify as a real estate professional. Okay. And then the third one, and this is missed on pretty much every video I've ever watched on real estate professional status here on YouTube, is you have to at least be a 5% owner of this business. Now, as a real estate professional, as an agent, most of us are independent contractors, and so we own 100% of our business, right? I own 100% of my agent business, and I'm an independent contractor on behalf of my broker. Okay. Well, the thing here that might trip you up is if you have an agent license and you're working for like a property management company and you're a W-2 employee. Okay, then you're getting paid. So you might be spending a lot of time in a real property trader business, and it might be the majority of your time. But if you don't own at least 5% of the company that you're qualifying under, right, the actual real property trader business, then you're not going to qualify as a real estate professional. Okay. So in order to be a real estate professional and have that status under the guidelines of the tax code, we have to hit all three of these. Okay. So super important. But I want to just preface this. If you're a full-time agent working and this is your main thing, you don't do any side hustles or anything like that, you hit this qualification, you hit these requirements almost by default, right? You might have had one bad client the first half of this year that you've spent 750 hours on, right? And not hard to hit. That's about 15 hours a week. So it's not even like you had to be working 40 hours or 80 hours a week or anything like that. It's 15 hours a week on average for 52 weeks straight. And then more than 50% of your time and at least 5% of the ownership. So um, that's the beauty of what real estate professional status is and why you so easily qualify. Now, there are a lot of people who look to grab this status because of the tax benefits that come alongside of it, right? So there's lots of investors and high income earners. You know, we've got doctors and people who have great salaries who are wanting to get this status. I mean, people are willing to break the law, and you see that in tax court cases all the time. People are willing to break the law to say that they're a real estate professional for the sake of the tax benefits. And here you are, probably qualifying by default without much little work or a little second, without a second thought. And you don't even know what real estate professional status is. And this is why I made this video, is to educate you on what this is and what are the benefits that come alongside of that. Okay. So I want you to imagine being able to wipe out your tax bill completely that comes from your commissions. So you've got a business that's spitting off all this cash flow. You're making great commissions throughout the year. Imagine being able to wipe that out completely every single year legally with this status right here that you qualify for, probably by default. Okay. So let's go ahead and dive in, and I'm going to show you a little bit about what this looks like. Okay. So we've got two types of income that our tax code breaks you up into. Okay, so you've got active and you've got passive income. Now, the official term, before all you CPA haters jump on me in this video for, it's non-passive. I say active because let's be real, that's how humans talk. And so we've got active income, right? So if you're over here and you've got you and your spouse, and let's say that you are a husband and wife real estate team. Okay, so you're both agents, you both qualify for this actually. Really, you only need one of you, right? So if you're married filing jointly, one spouse who qualifies as real estate professional status gives the benefits to you as an entire couple, which is really, really great. But for this sake, I'm going to use a husband and wife team because I actually just sat down with somebody in this exact scenario, which is why I got the spark to create this video anyway for you. So let's assume that this husband and wife team, they're creating about $500,000 in gross commissions coming in, right? Now, let's say this is actually not their gross commissions. Let's say that this is their net for the year. So they're planning on netting 500K. So this is $500,000 that they're going to get taxed on at the end of the year. Okay. So this is active income, right? This is money that they're making in their business. If they were a W-2 employee, this would be W-2 income. So 1099, W-2 income coming in. This is money that you are making by the sweat of your brow. On the passive side, we have rental real estate. Okay. So this couple here, let's say they own a couple of rental properties. All right. Now, rental real estate is always considered passive in the eyes of the IRS. Okay. So Oftentimes when we have losses from real estate, normal people, when they have a loss here, like a paper loss, right? Because real estate is really easy to create paper losses with. So you might cash flow $1,000 a month, let's just say, on one of the properties, but at the end of the year, you're able to show, a loss on your taxes. So you don't actually, you've been able to offset most of that or all of that income coming in from the rental property, and then you have this additional loss that happens. Okay. So when normal people own real estate, so non real estate professionals own real estate, their losses get trapped here on the passive side. And they actually just go into a little bucket and they fill this bucket. And then the next year, when they have income coming in on the passive side, they're going to go ahead and use those rollover losses against that income. Okay. And so, what real estate professional status allows you to do is when we actively, or actually, it's the correct term is materially participate in these rental properties, which just simply means if you're a real estate agent and you own investment properties, I'm going to go ahead and probably say that 95% of you are managing these rental properties, especially if it's like a single family residential home, long term rental, right? Super easy to manage. You are a real estate professional. You're going to be managing these properties yourself, totally fine and normal within this context. Okay. And if you can show the IRS that you materially participated, which means you're going to spend more than 100 hours and more than anybody else in the property. So spend 100 hours and we can actually group these two properties together. Okay. So we can spend 100 hours between the two of them, managing them for the year. Okay. And this allows us to take these losses that I create that would normally get stuck here in this bucket, and I can actually go ahead and use these losses and I can use them to deduct against my $500,000 income that I'm showing on the active side. This is amazing. And what this allows us to do is lower our tax liability tremendously, because real estate, because of things like leverage, and because of things like depreciation, when we can accelerate that depreciation using a cost segregation study, we might be able to create a really, really, really big loss here, right? So let's say that this couple, who's a husband and wife team, let's say they have two rental properties. And between the two rental properties, they're going to run a couple of cost segregations on these properties, and we're going to create $150,000 of losses, right? Maybe more, depending on the properties that they own. But let's just assume they're, pretty standard single family residential. They've acquired them over time. Maybe one of them used to be their, old primary house, and they ended up upgrading and now they turned it into a rental. Pretty normal run of the mill life that happens for a lot of people in our industry, right? Now you found yourself with a couple of rental properties. Well, let's run a couple of cost segregation studies on these, and I'm going to go ahead and create a $150,000 loss. And now I'm going to use that $150,000 to go ahead and reduce my taxable income over here. So now I just reduced my taxable income to 350,000, right? So I reduced it by 150,000. And if I'm sitting in the 32% tax bracket, I just saved myself $48,000 that I would have paid to Uncle Sam, and instead I'm going to go ahead and reinvest and buy my next rental property, right? And so this is the beauty of a real estate professional status. You can have your cake and you can eat it too. Now, one of the worst parts about being a business owner and deducting everything under the sun against my income is that if I were to show zero income, right, and I were just to write off everything and go buy a bunch of vehicles and equipment and things that I don't need and that are wasteful, quite frankly, I'm going to show little to no income at the end of the year. What does that do for me the following year when I want to go and qualify to go buy more real estate? Well, that makes it really difficult to qualify for lending, right? The beautiful part about using depreciation, like I'm showing you in this example, is we can reduce your taxable income. So let's say they had a lot more losses and they created a $0 tax bill for themselves. Well, using depreciation, now you got to have a smart, savvy lender who understands how to do this, but or just understands that this is possible. But you can actually add depreciation losses back into qualifying income when you go get a loan the next year. So when I say you can have your cake and eat it too, we can reduce your tax bill to zero but then add all of the losses that came from depreciation on your properties back in the following year when you go to get a loan on the next rental property, which is amazing. So we can reduce the tax bill and still qualify. That's like hands down. If you got nothing from this video, that little nugget right there should show you how powerful this is, right? I always tell this to clients. Uncle Sam loves two people more than everybody else. They love real estate investors and business owners. And if you happen to exist as both of those things at the same time, you unlock the golden ticket within the IRS code, which in my opinion is real estate professional status. Okay. Now, this isn't a loophole, it's a roadmap. All right. And I want to show you guys that roadmap, and you just need the right guide in place. Okay. One of the hardest parts about working with a CPA who's just a filer is you don't get a proactive plan in place. You're not having conversations around tax strategy. You're simply going to them at the end of the year or maybe at the beginning of the following year, right before tax season comes. And you're just giving them all your docs, and they're going to go ahead and say, okay, here's some standard things that we can do. Awesome, great. Here's your tax filing. I filed it for you. Yay, ta-da, you did it, right? You could do that. You could have TurboTax do that. You need a true consultant who's going to go ahead and look at your full situation and show you how to maximize the path that you're on, right? When I work with clients, I'm not necessarily even having to tell them that investing in real estate is powerful. Most of my clients come to me and they already have a plan in place, and they already own investment properties, and they're looking to acquire more. And this is part of their retirement plan. This is part of their wealth building journey. And all we're doing is saying, okay, let's take this plan and let's make it as efficient as possible on the tax side, right? So instead of 2 + 2 = 4, now we have 2 + 2 = 8, right? Because I eliminated this massive drag. So quite, just imagine your business like a boat in the ocean right now, okay? And you've got this massive tailwind from all the income that you're bringing in from business and rental properties and whatnot, right? For most people, the biggest drag that they have just dragging through the water, slowing their boat down, is their tax liability, okay? It's not, hiring an employee, firing an employee, losses here, business economy doing whatever. It's their tax liability. If their business is killing it and they're doing great things and they're growing, right? The biggest drag they have to their wealth building journey is the taxes. And if we can show them how to release that drag, now we get an equation where 2 + 2 = 8. We've doubled the returns that they're having, right? Because we can save them money on the tax side 100% legally just by knowing what the tax code is saying. Okay. So, like I said, this isn't a loophole, it's a roadmap. And I'm going to show you that roadmap right now. Step one, we need to qualify as a real estate professional. Okay. Most of you, if you're watching this video and you're a real estate agent and this is your full-time thing and this is all you do and you own a couple investment properties, great. You're in a perfect position. Step one, you've qualified for real estate professional status. Okay. Step number two is we need to buy real estate that benefits from cost segregation studies. Okay. So sometimes buying what we know is great. Buying a residential single family home, turn it into a long-term rental, boom, easy deasy, rink a dink, done. Okay. But sometimes we want to maximize what we're going to be doing. So if I know I'm going to be investing in real estate, knowing what asset classes do best for depreciation can be extremely helpful. For instance, if I went and bought, I just saw a self car wash listed here in the Phoenix area for $550,000. If you go buy that asset for $550,000 and you're going to create some cash flow from people going there and using the services and the amenities and whatever, right? A car wash actually probably allows you to go ahead and take like 90% of the value in year one when you run a cost segregation study. And so knowing what assets perform better and worse when it just comes to like the tax benefits and depreciation can help give you a clear roadmap and where you're going, right? Step number three, we're going to match the deductions that you're taking with your income. Okay. So for a lot of us, most of the income here is coming in on the active side, right? The majority of your tax burden is coming in from, your real estate business or whatever business that you might own or your spouse's W-2 or whatever it is, right? That's the majority of the tax burden. But there are cases where you might have a sizable amount of income coming in on the passive side. we might not even need a real estate professional status. We might just be able to optimize, your Schedule E when you're filing these rental properties here. We might just be able to maximize your Schedule E to show the correct amount of losses that you should be taking every single year. And that can just help offset the income that you're bringing in from your rental portfolio. Okay. So it really depends on where you're at in your life, right? Are you in the starting growth phase, or are you in the, nearing the end and retirement phase, and you're just looking to stabilize? That can heavily dictate like what your tax strategy looks like and what the next 5 to 15 years might look like in terms of long-term play as well. Okay. Step number four is we're going to rinse, repeat, and grow your portfolio. It's as simple as that, right? Buy more real estate, reduce your tax, repeat. Buy more real estate, reduce your tax, reinvest the tax savings. It's literally that easy. And this starts to really snowball when you have multiple properties spitting off the tax benefits. Is we're going to get to a point where we can reduce your tax bill to zero. And if you already own properties right now and you haven't run a cost segregation study on them, and you have no idea what real estate professional status is, and your tax guy hasn't had any of this type of conversation with you and putting a plan in place, you're probably in a great position this year, 2025. We can go ahead and look back and catch all of this up, and we'll probably be able to reduce your tax bill to zero. In a lot of cases, we've worked with a lot of clients that are in that exact scenario that you might be in right now. Now, I just want to emphasize one key thing. You don't need to be flipping properties. You don't need to be wholesaling properties. You don't need to go out and manage 10 Airbnbs. Literally just buy with some intentionality. Okay. For a lot of people, it's, hey, I'm just going to go ahead and buy a new primary every 1 to 3 years. Okay. As aggressive as you want to be, if you wanted to do it every year, great. If you wanted to wait once every 2 years, which is what we recommend, because then we can defer, we can actually eliminate some of the capital gains if you decide to sell that property because you've lived in it for 2 out of the last 5 years, then great, we can do that. If you want to slow that down and it's like, hey, I don't want to move every 2 years, my spouse would actually kill me if we did that, then you can go ahead and slow it down. Buy a primary house every 5 years. But if you're moving and you're growing your portfolio over time, just buy with some intentionality. Buy the house with the idea that it's going to become a part of your portfolio. You don't need to go and spend 25, 35% down on buying investment properties if that's not in your wheelhouse. Just simply be intentional about the purchases that you have in front of you over the next 10 to 20 years, and you're going to look back and find yourself in an incredible position. Now, if you want to maximize the tax benefits, buying a piece of real estate every single year is going to help you do this. And you're just going to be able to reinvest the money that you would have paid to Uncle Sam and put that right into real estate. It's one of the beauties of real estate. Uncle Sam wants you to invest in real estate because, look, real estate is a private industry. Who builds our buildings? Who builds all of our communities? Private investors. The government doesn't build these things. And so what happens is the tax code has to incentivize investment dollars to flow into different industries. One of those industries is real estate, right? And so there's reasons why you get the best tax benefits if you're investing in real estate. It's why it's the best asset class, in my opinion, better than any other type of asset class. Is if you're utilizing it to the full potential, there's really nothing like it. Okay. Now, your CPA might be great at filing taxes, but that doesn't mean they know how to reduce them. And this is one of the hard truths that you have to accept. I don't care if your CPA is such a nice guy and you've known him forever. The problem actually with most business owners is they got into business and they started using the CPA that they've been using, and they never change CPAs. They've never asked questions. They just say, "Oh yeah, I let my tax guy handle that." And they've outgrown the services that are in front of them. Right? CPAs often avoid things like real estate professional status because it requires documentation and education. Like, I'm creating this video educating you on how to qualify as a real estate professional, but there's another piece of this where we need to be able to make sure that you're documenting your time. So you need some time logs to show that you're a real estate professional, and you also need time logs to show that you're materially participating in the rental properties that you own. And so there's an element to this that CPAs just don't want to bite off, right? They just want to go ahead and do the easy work. They just want to see you one time a year, file your taxes, say, "Oh, I saved you a couple $1,000s," and then send you on your way. And then they'll go and leave, and they'll be on their, beach for the next couple months while they take some time off from the busy season, right? So I don't want you to be put in that position. Most CPAs also don't specialize in real estate. Finding a CPA or a tax guy that specializes in real estate is kind of like finding a unicorn. Now, you go inside of the real estate industry, you're an agent watching this video, you know, if you have a tax guy who knows real estate, their name gets around, right? That's us. That's us. We all we do is work with people in the real estate industry, full-time investors, people who qualify for real estate professional status, and we help our clients optimize their real estate portfolio and just make it as efficient as possible. We don't want them overpaying Uncle Sam more than they have to, right? We want to pay what we have to, right? We're not going to cheat and cut the law to do those things, but many people overpay Uncle Sam, and you're never going to see that money back when you do that. And so we need to stop that right now. We need to put a plan in place and have a strategy that's proactive, right? You need to get out of this filer mentality, stop filing your taxes like a W 2 employee, and start putting a plan in place and build a strategy to be as optimized and efficient as possible. Right? We don't need to overcomplicate your life. We don't need to change your game plan for how you build wealth or what you're doing for retirement. We just need to go ahead and say, what are you trying to accomplish? Awesome. Let us help you release the drag, right? I want you going a million miles an hour, straight forward, accomplishing your goals. So if you're watching this video and you're thinking, hmm, I don't think my tax guy has ever showed me any of this, never really had conversations around how to reduce my tax bill midway through the year. I don't really meet with my tax guy quarterly because, I just kind of assume he knows what's going on in my life. He doesn't. Okay. So if that is you, you need to book a strategy call. Look at the link in my bio, book a strategy call. I'll link it in this video as well. And let's jump on a call and just see what you got going on. If you've got multiple properties and you've never done any of this, we'll just review that real quick and see what we can do to help you. I want to be your best friend in real estate for my fellow real estate agents, right? I'm a licensed agent and we run a specialty tax firm. All we do is live and breathe tax and real estate. And we love it. And I want to help you if you're a real estate agent and you find yourself in these shoes. And last but not least, go ahead and if you're watching this video and you're like, I'm not sure that this actually applies to me, go ahead and subscribe. I'll be sharing some more content that I'm sure will relate to you. But in the meantime, watch some of my other videos, and I would love for you to stick around and see what I can do to help. Thanks.